The market is in full panic as stocks continue to sell off. And today I want to give a broad view of the market because I do think something very unique is occurring. And the first thing I want to look at is today the Bear Bull survey came out, and very early in the morning before the market even started to sell off, we had this reading of over 60% of the people that were surveyed here were bearish on the outlook of the market. And if you read the header here, this is essentially if you surveyed somebody and said, what direction do you feel the stock market will be in the next 6 months? 60% of the people that were asked that question thought the market would be lower. So for me, that was surprising because the last time that I could see we had a reading of 60% of the people that were bearish was all the way back in September of 2022. And I want you to remember that, September 2022, because we're going to look at that date in SPY. And we can see 20% of the people are neutral, so they don't have a dog in the fight, whether we go higher or lower. And then only 19.4% of the people thought the stock market would be higher. So I personally am one of the 19.4% of the people. I think in the next 6 months from these prices, the stock market will be significantly higher. And for that reason, you have to understand a lot of what I'm talking about is based around the S&P 500. And I do believe 60% of the people are going to be very upset that they were getting bearish right now instead of taking this as an opportunity to start buying. So we'll look at SPY specifically, but I also want to show you the fear and greed index, which is an extreme fear. So this isn't just the survey that is saying the same thing. People are extremely fearful right now, and there has to be a reason for it. And that's something I do want to talk about tonight. But when we look at the S&P 500 from the all-time high to where we closed today, we are not even down a full 5% from the previous all-time high. And in my world, this is the stock market. And in my world, this is an extremely mild pullback. But I will admit, I even made a video called PLTR is coming down 30%. And yes, if you were in PLTR while it was dropping 30%, I completely understand why you think the stock market is crashing. And I completely understand that you are not having a great time, which is why I made that video, because I saw it coming and I saw the opportunity that some of those companies that were just extremely overvalued were just getting exhausted and they were coming down in a big way. But you have to remember, in the lens of the stock market, I am looking at the S&P 500 and I just cannot believe that we have this extreme bearish sentiment when we're not even down 5% from an all-time high. So call me crazy, but that's the way I see it. We'll have to see how this plays out. And I do want to go back to September of 2022 because this was the last time we had the bearish sentiment at 60%. And if you look right here at the screen, we were down at SPY levels of 356. And from the all-time high, we were down over 25%, which does not surprise me that 60% of the people were bearish because the stock market was in a full-blown bear market going all the way back from January of 2022, 9 months later, slowly bleeding out to a over 25% decline. So yes, there is a good reason why we had 60% of the bears back there in September 2022. And then of course, you could tell from the chart that did mark a bottom, and then we just started rallying out of the hole from a double bottom. But that is something you need to decide in the future if this is going to mark a bottom. It's really hard to say that it will because, like I said, we're not even down 5%. And I personally don't like calling that a bottom, nor do I like calling that a top, because to me, this is just a mild pullback and anything is possible once you start getting a mild pullback. Of course, it could get worse or it could be another higher low within a bull trend before we go even higher. So the first thing I want you to understand is that sentiment is all over the place right now. And I want to look at the broad market. I want to look at the indices and I want to look at individual stocks, and we'll even look at the bond market. So we're going to be jumping around a lot today, but I'm going to try to help you understand that the market is in a very unique situation. And for that reason, your specific situation may be completely different than another trader's because it depends on what you're trading. So if you're in SPY, you're in a very mild discomfort on a very mild pullback. But if you're in something like PLTR, it did exactly what I said it was going to do, which was drop 30% down into the low 80s. And from the all-time high as of today, we're down over 30%. And we're sitting right on top of this gap close zone, which I told you was an exhaustion gap. If you watched that video, I gave the reasoning on why that gap would fill. And as of today, you can see we filled that gap perfectly, almost to the penny. So in my world, seeing this coming and preparing for it does not warrant any sort of panic. And yes, the S&P 500 is in a drawdown currently as well. But again, this is something that is just completely natural in bull markets. And this stock like PLTR was up nearly 100% from just this year alone. So this 30% drop is still pretty run-of-the-mill sort of volatility for a stock that is moving with such wild movements. And again, I still believe this was broadcasted on the chart before it ever even happened. So let's look at another stock because NVDA absolutely crushed their earnings and raised guidance. And I talked about this just last night, how there was going to be this high risk zone in the mid 130s. And even though earnings are good, it doesn't guarantee that a stock has to go higher. So I gave you this bearish scenario that from the mid 130s, we could still drop down into the 120s. And of course, you can tell the rest is history. That all happened in one single day. So there was clearly lots of fear and panic in NVIDIA stock today as well. And we did close down below the 200 daily moving average, and we did close down below this support at 123. So right now with NVIDIA down below 123, if it continues to close below 123, it's likely coming down towards 116 and then 110. So that is definitely bearish for the overall market. Remember, this is a market moving name. And if we look at the triple Qs, we were also down 2.78% today. But even to me, this is still a pullback because from an all-time high, that is just in the realm of a 7% pullback, which again is completely normal in bull markets. We get these all of the time. We just had one recently that was 7%, and then we went to another brand new all-time high after that. And if you zoom out and really look at this, this is still a trading range, and right now we are currently at the bottom of that range. So if we start to break down below 500, we do have this gap down here and a rising 200 daily moving average at 493. So there is risk developing to the downside if we start breaking down below support zones, and here on the triple Qs, that is now right around 500. So yes, there are reasons to be concerned, and there are definitely things going on beneath the surface that are causing fear. But if we jump over to Berkshire Hathaway, Warren Buffett closed at a brand new all-time high today, going up 1.68%. And I talked about this as a very good indication that the stock market was not about to crash, and it was more than likely just a pullback within a bull market. And I still have reason to believe that because Berkshire Hathaway came back down to the rising 5 EMA and just bounced right off of it and closed at another brand new all-time high today. On top of that, if we jump over to the financial sector, which is all of your major banks, which is a very important part of the S&P 500, while we did get a rejection below the 20 daily moving average today, we're still in a range between 50.7 and a brand new all-time high above 52.2. And from the all-time high on the financial sector, we're barely down more than 2%, and this is just not something you're going to see in a nasty crash or a nasty bear market. Now that could change. Let's say, for example, the financials start breaking down below 50 and start heading down into the 40s. That is going to be more objective evidence from price that now the financials are being sold off, and that will be a lot more concerning. But the last thing we saw it do was bounce off of a rising 50 daily EMA. So as you can tell, there are a lot of mixed signals in the market right now. I am not surprised to see that stocks like PLTR and NVIDIA are getting drastic sell-offs because they've been on such monster bull runs. But if I'm looking at the health of the S&P 500 in general, with the financials only down 2% from an all-time high and SPY not even down 5%, I don't think that the bears are going to be right and that they called this to the exact tick of a top. They all got bearish at the right time, and they're all about to make a bunch of money shorting the market as it crashes. Again, I could be completely wrong, and I am not trying to tell you to throw all risk to the wayside. I am simply telling you that when the majority are getting extremely bearish like they did in September of 2022, and you're getting the extreme fear reading on the fear and greed index, it is more than likely that we just hit the range bottom today and we're about to bounce, and it could be a significant low, which is also here at a range bottom, which could easily still be some sort of higher low within a bull market as we do continue to trend higher. Again, not telling you to throw all risk to the wayside. I am simply telling you that maybe everything is just fine, and we just did a very quick pullback that is now about to be over with, and that will be evident very quickly if we just start to V-shape out of this hole and go right back up to where we were at the top of the range. Now, the best way to manage risk on SPY is simply going to be right here at 585, because if we can't hold 585, then we do have this support down here right around 573, which will also be a rising 200 daily moving average. So again, manage risk however you see fit. It is completely fine to sit out this volatility until things subside and get more clear. But there is definitely something going on with the market, and I do believe a lot of the bearish sentiment is simply because people got away from the blue chip names that were doing well, and they started to get in some of the crappy stocks that I talked about, like the ARK Invest Fund, which is buying things like Palantir and HIMS and SoFi and Upstart. And there's so many other tickers that were becoming retail favorites. And that is exactly what happens when everybody starts catching on to a bull trend. And those names are not what is moving the S&P 500. So I do believe the S&P 500 500 did get caught up in some sort of sell-off. Maybe somebody got over leveraged and had to dump their positions, but that is the exact type of behavior that puts in capitulation bottoms and capitulation lows, which is also what we are seeing with the extreme fear and the extreme bearish sentiment. So it's also going to be important to look at TLT, because I did tell you with TLT breaking above 90, that was going to be a concern if we saw a bunch of money pouring into the bond market while the stocks were selling off, because that is the type of behavior you're going to see in a recession. And in a recession, the bond market will typically do well as the stock market does poorly, and that is simply because people are losing their jobs. Corporate earnings are no longer looking attractive for stock market growth, and a lot of money is just running for safety. And one of the best places to go in a recession is the bond market as the Federal Reserve starts to ease. That is very bullish for the bonds, and that will drive something like TLT higher. But even that was not making sense today, because TLT actually dropped 0.71% today from that resistance up here right around 92. So the bond market did not go higher while the stocks were selling off today. So it was really just a sell everything and ask questions later kind of day, which is completely fine. But again, that is more evidence of more of a capitulation event where people are saying sell now and ask questions later. And that is when everybody is running for the door at the same time, which is more often than not going to put in a bottom and not going to lead to a deeper crash, because everybody that has wanted to sell has already sold. So in a long-winded way of saying this, tomorrow will be very important because one, it closes out the weekly candle, which is obviously extremely bearish right now because we just closed at the very low of the candle of the week and we're getting high volume selling all week long. But today we did close the gap right here on SPY at 585, and tomorrow we do have the PCE data, which could totally flip the script, or it's going to lead to even more panic selling as we go even lower. And trying to guess that is a loser's game. It is much better to simply have a trade plan and react to it. And right now that is going to be what happens at SPY 585. We're either bouncing back up to 594 or we're breaking down and going to 573. And there's a trade in either direction. All you need to do is see what price does tomorrow. If it gaps above 585 or gaps down below it, is going to tell you a lot about what price is likely going to do tomorrow. So understand there is massive fear, massive panic. Typically, Warren Buffett would tell you that is when you should be looking to buy and be a contrarian, but obviously make sure whatever you're doing, you're managing risk. And I want to make it 100% extremely clear that if you are using that information to go buy a piece of crap like Palantir, you are totally missing the point. In that video about Palantir, I told you how it could go down 50 to 70% from the high, and we're only down 30%. And that means you need to very closely manage your risk if you are a Palantir bull right here, right around 82. And if we break down below 82, it is possible this thing comes all the way down into the 50s. So don't just view this as, oh, he's saying there's blood in the streets and mass fear, it's time for me to go buy my crap stock that I've been wanting to buy. That is definitely not what I'm saying. I am saying buy quality. Look at the S&P 500 index. Look at blue chips within the S&P 500. And also look at other sectors, because like I was showing you with the financial sector, it looks like banks are in a very strong position here with a very easy risk level to manage at the range lows on XLF. And then even if you're getting fearful, you could always do something like the bond market, and you could go look at opportunities to buy the dip in TLT, which is also starting to get some sort of higher lows and higher high breakout structure while it's above 90. So there are always going to be bull markets in every single market, and the bond market could go into a bull market even if the stock market does go into a bear market. So broaden your horizons, get out of the crap stock world that you're living in where you have to buy something like Palantir and that's the only stock you're paying attention to. You really need to move past that at this point. You could be causing lots of damage to your trading if you're only focused on a stock that is extremely overvalued, that has already dropped a very significant amount and could be going down even more. And then to illustrate that, we can go over to the ARK ETF and see this thing is also down about 20%, and this isn't even from an all-time high. If I zoom out here, this thing is down from the previous all-time high, still down about 63%. So take this stuff seriously. You have to buy quality stocks, and you have to be focused more on the index like SPY and the triple Qs, which actually have the high quality blue chips in them, because this ETF could also be going down way lower even if we see SPY starting to find support and bounce here. So focus on quality, understand why there's a discrepancy in the market right now where some people are freaking out and then other people like me are thinking, hey, this is just a typical pullback within a bull market. I do understand how that could sound confusing and why some people are saying, what the hell is this guy talking about? Everything is crashing. But you have to understand it from my point of view. SPY is not even down 5% from an all-time high, and I cannot rationalize how that's a crash, and I cannot rationalize how we already have 60% of the people that are bearish sitting at extreme fear when SPY is in what I consider a normal pullback that is completely manageable and not scary at all. So I hope that helps shed some light on the mass panic and fear going on currently. I do believe it is only in certain pockets of the market that retail traders have found themselves in and chasing things they should have never been chasing. And that is why I think a lot of those stocks are already down 30% or more. But keep in mind, that is not the stock market. That is not the broader index. And that is not the story that I am seeing when I look at SPY, not even down 5%. I'm looking at Berkshire Hathaway closing at a brand new all-time high. And I'm looking at the financial sector, which is the entire banking industry that is not even down 2% from an all-time high. This just isn't making any sense why everybody is getting bearish. And I do believe the majority is going to end up getting this wrong. And I don't think it is going to be surprising. I think it's going to be completely expected that we are going to start rallying off of these lows, even if we go a bit lower first, because I'm not trying to call a bottom and I'm not trying to say we can't go any lower. I am simply saying that I think we're closer to a very important low, and I don't think the stock market is going to crash by evidence of the S&P 500. I do believe a lot of those crappy stocks are going to continue to crash, and that's why I'm heeding warning to stay the hell away from them. So focus on quality. Don't worry about all the crap stocks that bought into the hype. Those will all get fairly valued in due time. And you do not want to be part of the crowd that is catching a falling knife on a piece of crap like Palantir. Even if you like the company, this stock is going to end up being a crap stock that a lot of people are going to lose a lot of money on because they never knew when to stop chasing it. And that is the danger of chasing a stock like that and getting fearful that the whole entire market is going to crash just because your little world you're living in is starting to go lower. Focus on the bigger picture here, and the bigger picture is still telling us that we are fine and there's still plenty of time to manage risk and react, even if we do start to break down and continue lower. So take it day by day, have a trade plan and follow that trade plan, and make sure that trade plan is around following price action on the chart and not just chasing what the herd is saying or the mentality of the crowd. They're typically going to get it very wrong, and they're not just going to get it wrong, they're going to get it massively wrong. So if they're looking for a crash, I would immediately start looking for the exact opposite and possibly even another very bullish rally. So stay disciplined, stay focused. This market is very volatile, so it will take discipline and patience. And as I always tell you, make sure your trade plan is managing risk, because even if you're losing trades, your winning trades will make sure you're profitable as long as you're setting up the proper risk reward ratios. If you want to come trade with me, the best way to do that is TSC Trade Alerts, which you can find out how to join in the description of this video, where you'll get the exact buy and sell alerts that I am taking for the TQQQ and the SQQQ. So thank you for watching, everybody. Now go crush this market.